Volume validates or invalidates price action, and I'm going to explain exactly how that works in this video. Hey guys, what's going on? Mr. Zink here. In today's video, I'm going to break down exactly how I use volume on TradingView to validate or invalidate my setups. Let's get right into it. First things first, what you're going to want to do is go onto TradingView, go to indicators, look up volume, favorite it, and activate volume. It is the only one that just says volume. All the other indicators are things that use volume. We're only worrying about what the volume does itself. Go into the drop-down menu in your top left, activate VOL, that stands for volume. Once you have it active, yours will be red and green. Here is the color that I use for my red bars on volume. I prefer not to have red on my chart for several reasons. I'll cover that in a later video. This is the color I use here. Great, now that you have volume activated, I'm going to show you exactly how I use it to validate or invalidate my setups. For these volume pillars, what you want to see is price coincide with the strength or size of the volume pillar. For instance, on April 9th, we had a 13.6% day up on Qs. Volume was also extremely high. Whereas for the following week and a half even, as price decreased, so didn't the volume. Volume went down as price went down, which indicates that that is an invalid move to the downside, meaning that you're looking for an area to go long or a setup to have a nice breakout of that pattern. Now that you can see, once we did break out of that structure, volume also broke with price action, meaning that that was a valid move to the upside. Past 3 days have been a valid move to the upside. Now what we'd be looking for is either consolidation sideways with volume decreasing as it consolidates, or we look for a continuation up with continued price action or volume to the upside. Going over to Bitcoin and reading this chart just because it looks so clean, we're going to break down exactly why I have a price target set to 95,000 on Bitcoin. First things first, I saw the April 9th day with a volume that came in on Bitcoin as well as the 8% pop up. The very next day we had a 3.7% print to the downside, but where was volume? Just about a third of the previous day. As we consolidated sideways on Bitcoin, we had 8 days within the same inside bar or mother bar that we printed on Saturday, April 12th. That bar was 2.2%. The following 8 trading days were all within that 2% range. What did volume do for the following 8 trading days? Volume decreased. It went down. What happened once we broke out of that structure, out of that inside bar? Volume had a pump up to about 2x the highest volume day within that 8-day consolidation period. What happened on Tuesday, April 22nd, when we continued that move to the upside? Volume came in even higher. Again, Wednesday, we had an even higher print in volume, not from Tuesday, but a higher print from Monday. And then today, Thursday, April 24th, what happened when price action started to reverse? Volume went absolutely nowhere. Dropped out the window. We had about half the volume we did on the continuation day on Wednesday. What this is telling me is that we are still in an uptrend on Bitcoin. We still want higher. We're just cooling off for the time being. Price action cannot go straight in one direction for an extended period of time without cooling off. How you read that is you look for volume to cool off. If you have an uptrend, as we did on the 15-minute time frame today on Qs, if you have an uptrend, anytime you see consolidation or sideways price action in that trend, always go and look at what volume is doing. For instance, today on Qs, we went sideways for about an hour and a half, 11 o'clock to 12:15. What did volume do in that time frame? Volume also decreased all the way until 12. What happened once we had a break of structure at 12:15? Look at the volume candle that came in with that. Volume continued to increase from the previous decrease in candles. We consolidated again for about another 2 hours, hour and a half, 2 hours. And then we had a continuation to the upside with a very strong 4-hour close on Qs today. Going to the 4-hour time frame, we can see exactly where price action comes in, where the volume comes in, at which point of the day. The first bar that you see that spiked up is your first half of the trading day. Second bar is your second half. If volume comes in with a strong print while price action is going up or down, that validates the move. If volume comes in with a weak print as price action is going up or down, that invalidates the move. What you want to see when you have price action going in one direction is you want to see volume also line up in that direction. For instance, if you have a red candle come in, but the volume is looking something like this at the bottom of the screen, that red candle is probably invalidated. Same thing for a green candle. If you have a green candle coming in with very minimal volume associated with it, it's probably an invalid move. I like to use this on the 24-hour time frame, especially when we're consolidating. As we previously covered, volume was decreasing from April 9th, and then once we broke that structure, Tuesday, April 22nd, volume spiked up as well, and then continued to spike into Wednesday. What you want to see is just strong volume pillars with the direction that price is going. Let's go over and analyze Wednesday, April 2nd to Friday, April 4th, when we had those 3 consecutive 4% down days on Qs. What did volume do? Volume validated that move. We had Wednesday, April 2nd print a decently high candle for volume pillar. Thursday, April 3rd came in even higher, validating that move to the downside. Friday came in the highest out of those 3 days, further validating that downside. We had a 6% print to the downside, pretty much no buying pressure for the day. Volume validated that move to the downside. Monday comes around, we gap down 4% on Qs, end up closing up 1.6%. What did volume tell us? Volume told us that that was an extremely valid move. So what we are doing here is we're changing our state and delivery. We're looking for a different move or a pivot in price action. What does volume do the following day? We have a retracement of 4%. Volume was about half the print of Monday, April 7th candle. That tells us that this was an invalid move on Tuesday, April 8th. So we should be looking long for the following day, Wednesday, April 9th. What happened? We had news come out from Trump saying that tariffs were going to be paused. Volume told the story this entire time. Same thing for Monday, April 21st. I actually posted this within all my socials and the Discord that I'm in. Volume told the story for all of Monday, April 21st. Go to the 4-hour time frame. Go to Monday, April 21st. The first half of the day, I'm going to zoom in on this so we can really see it. We're looking at these 2 candles right here. The first half of the day, when we had that 3.5% drop, volume was pretty lackluster, right? It wasn't really present. Whereas for the second part of the day, when we had a pretty good move up, we had about a $5 move up on Qs within 30 minutes. Volume told us that that was a valid move to the upside, so we should be looking long for the following day. Go to the 24-hour time frame. What happened after Monday, April 21st? We had a crazy 4% expansion to the upside. Volume came in about twice the size of the previous day and then continued to print on Wednesday. And that's exactly what you want to look for. It doesn't matter what chart you're going to go look at. Let's go take a look at Tesla. Go to the 24-hour time frame. I know I have a bunch of lines on here. This is from another video. Let me delete the Fibonacci retracement. Tesla, same exact thing. And this is exactly why I was long heading into earnings on Tesla. What did volume do after April 9th? We had a move to the downside on Tesla. Volume also drastically decreased over those 8 trading days. Straight down on volume. A slow, steady move down on price action. This is a controlled sell-off. This is getting people out of their positions by manipulating price to the downside with weak volume. Then what happens? We have a 10% day with pretty high volume. I mean, this volume was higher than almost all of those days to the downside. Wednesday, April 23rd, volume continued to the upside. Thursday, same exact thing. We had another 3.5% expansion. What I'll be looking for tomorrow, Friday, April 25th, is a further expansion. Probably going to go test those Wednesday highs at 277. This is just how Tesla moves. It's extremely volatile. It likes to move $10, $13 in a day. So 277 is well on the table for Friday, April 25th. All I'm getting at here is that volume is going to tell you the entire story of the candle without even looking at the candle. If I scrolled all the way down back to the beginning of the video when we were just looking at volume, what this tells me, this initial candle right here, tells me that we have a very, very strong buying pressure for that day. We have incredible buying pressure for that day. What happens after? Volume takes a nosedive. What I'd be looking for is a breakout with volume before even looking at price. I want to see volume spike up. When volume starts to overtake those previous days of that downtrend, that means you're validated to go long or short depending on what side that volume's crossing. In this case, it was crossing to the upside. It had about 3 hours left in the day to overtake that volume. So if you hit the equal volume from a previous downtrend or the equal volume from a previous uptrend with plenty of trading left on the day, that tells you that you should probably be going long or short or inversing that trend that you had for the past 7 to 8 trading days. You can do this with any chart as the volume is present on any chart that you have. If we want to go take a look at Google heading into earnings today, for instance, Google had a pretty explosive earnings today. What did volume tell us? Volume told us that as we were dropping in price action, volume had a small increase, and then it took a pretty hard nosedive on Monday, April 21st. We had Tuesday, April 22nd, print equal volume to Monday, and then that expansion started on Wednesday, April 23rd. Now that earnings is out, look at the volume spike that we have with a validation to the upside of 70.3%. 7.3, sorry. Volume is telling us that we should continue a long bias heading into tomorrow, April 25th, because it's beating out pretty much all the downtrend that we had for the past 7 trading days, and it's going to continue to push price action to the upside because buyers are stepping in, and they're stepping in rather aggressively. Go and look at Apple. Apple is actually in a pretty good spot right now. We're coming up to a decently large resistance level, 209, 210 just about. What is volume doing? Volume is selling off pretty hard. So if volume's decreasing while price action is remaining flat, meaning that it's consolidating, as soon as we break out of this range, let me get rid of these other lines so it looks a little cleaner. As soon as we get indication that this is going to break this range, 209, 210, we want to see volume come in the earlier half of the day, and we want to ride that wave up with a trend. First price target on this will be the next resistance level, all the way up here at 224. So if Apple comes in, let's say tomorrow, April 25th, Apple prints a pretty large volume candle to start the day. The first 4-hour candle beats out all these previous days. As price action is consolidating, that volume candle prints the same volume within the first 4 hours of market. For the next 4 hours of market, we're looking to go long to the next resistance level. In this case, it's 224. Now, let's say Apple starts to sell off and reaches the bottom of that trend again at 192, while volume continues to sell off. Then we'll do the same thing just to the short side. I hope this all made sense, and I hope that you start using volume with all your trading strategies moving forward, because it really does tell the whole story. It tells you exactly what you need to see while you're trading. And it tells you what the move is going to be before it even happens, because big money positions themselves before retail does. If you take advantage of looking at volume, you're going to take advantage of what big money is doing, and you're going to get a jump start on everyone else. I'll catch you guys later this week for another video. I hope you have a great rest of your day, great rest of your week. Peace out.